Our next guest has been doing some intensive research into tax law selling as we approach the year's end. And he says it's been tough for investors to make money trying to time the market, but he has a strategy that might work in the very near future. Pankaj Patel, he is Senior Managing Director at ISI Group, joins us now from the NASDAQ. Welcome to you. Glad to have you with us. Going through your report, why did you choose to look at the Russell 1000 Growth Index in the first place? What was the rationale behind that?
Thank you, Pamela. As you had mentioned, this kind of strategy works better in a large cap growth index, and the Russell 1000 is a large cap growth index. So what we find in our test from 1980 through now, that the selling winners early, and investors basically what they do is they sell their winners early and they keep on their losers. And so if you're using this strategy, the long-short performance of this strategy is about 11%, 7% on the long side and 5% on the short side. And this does work in the regular large cap index also, but it is not as powerful. It looks like mostly the individual investors are playing this kind of thinking, and that's why it works in the growth index.
So tell us a bit more about your strategy. What investors should consider as we get to the end of the year and they want to take advantage of the benefits of tax loss selling. And that, of course, in general terms, of course, that's selling stocks that have been losers to accumulate some losses that will offset the tax obligations on some of the winners. But tell us more about your particular strategy.
Yeah, so this strategy, we call it, or academics call it, a disposition effect. What investors do, that they have the target price for the stock when they buy it. So when it reaches their target price, they sell it. And the stocks which they buy it, which are losing, they keep holding onto it. And that creates the opportunity for this strategy.
So let's go through which, we'll take it in an industry side of things, which industries to sell, essentially the industries that have had a rough time.
Yeah, so this year, for example, technology and energy has highest losses. So that would be the one, the sector you want to sell it. And industrials and healthcare, they have highest unrealized gains. So you want to go long on those.
And what about industries to buy? Healthcare is one of them.
Yeah, healthcare and industrial sector. So those two are the sectors which has highest unrealized gains. Like healthcare is 89% and industrials has 85%. On other side, technology has 40% unrealized losses and energy has 43% unrealized losses. So those are the two sectors. Those two sectors are not favored by this strategy. And also we believe that this strategy is going to work. Well, it has been working from 1980 through now. And it has not been working as well in last 5 years after the financial crisis. And what we believe is that because of the financial crisis, retail investors have moved out of the market. And as you know, the market is up more than 25% this year. As retail investors gets in, and also to manage the taxes, and the taxes are going to go up. So it is better to sell your gains this year to lock onto your lower tax rate, and then hang on to your losers for next year, and then sell it next year to take offset losses.
And you think that is just for this year?
Well, this year it is more likely to work than in the recent past, because of the market has been up and more retail participation is gaining, coming into the market.
What effect does a bull market have on the environment that investors would be operating in when they try to employ this strategy?
Yeah, so like in bull market, this strategy, other reason we think it is going to work is as the market goes up, investors, when they have their target price, they will sell it, and most likely they sell too early because they do not revise their target price, and they will hang on to their losers. So if you are playing this strategy is likely to work in 2014.
Pankaj, very interesting report, somewhat complicated. We're going to tweet it out so people can take a look at the nitty-gritty within it. Thank you for joining us.
Thank you.
Pankaj Patel is a Senior Managing Director at ISI Group. He joined us from the NASDAQ.